So, are you tired of this trading range? Well, I got some news for you. We're still in it. Bear down on the lower end of the trading range, but with this market, who knows? We could be green just like that. Mixed bag of earnings, some good and some bad. The bad is from a big member though, a big stock, UPS. We're gonna talk about that. We got a lot of earnings to cover, so let's get to it on this Tuesday pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. We're starting the day out in the red by 18 3/4 handles at 4140.75. Never saw that closing price of 59.50 on the downside, 41.30. We keep expanding the bottom of this trading range, but bouncing right back. We'll see what happens today and also after the close. Buck, a little bit of a rebound, up 21 cents, so 101.28 and a half. Bonds catching a bid off 130, now back to the 132 area, up 29.30 seconds at 131 and 21.30 seconds. Crude giving back yesterday's gains with another double top, down 75 cents at 78.01. Gold well under 2,000, down 13 bucks at 1986.80. Silver slipping into 24 handle, down 75 cents at 24.56. Bitcoin quiet, that's down 10 bucks at 27,390. We're going to bring in Triple D, and Triple D, just take a stab at what the straddle was in FRC.
Was it $3?
$4.
Holy, they had it at $4, eh? Man, the option buyers just don't make money. It's so tough. I mean, I guess you get direction, right? I guess you can make a little bit there, but it's so tough to buy options. It's just never really. Again, when you get the VIX really low, you can buy more options and sell options, but 17 is still not historically low. It's still, on the upper end, in my opinion. I think normal is like 15 to 16. And when you're really slow, it's down 12, 11. But it just goes to show you, it's just a losing game to be a net buyer of options. People make more money selling options than they do buying options. It's why Nick Shaheen's been in business for a long time. It's why a lot of other people have been in business for a long time. On the sell side, one of my buddies, Chris, that's all he does. He sells options. He does different strategies with it, but he's always a net seller of options. And he's made a lot of money over the years doing it. So hard to make money buying options.
Yeah, and it's down 349. So let's go. I mean, the report, they beat, right? They had a nice beat, 123 versus 85 estimate. Sales 1.2 bill versus 1.15. But man, they gave a net interest interest income down nearly 20%. They're closing banks. They're reducing the workforce. Boy, oh boy.
The bigger issue was the deposits, and the
Yep.
deposits fell substantially. I don't have the number in front of me, but I heard 40% down. So there was a lot of people who took their money out of First Republic Bank. And here's the bigger issue, is now that people see that, you actually are seeing people take the money out, that will make more people nervous, all likelihood.
Mm-hmm.
So I don't think it gets better. So it's difficult to come in here and say, oh, the valuation, it's pretty attractive. If more people continue to take their money out, the bank could go under. Not saying it's going to happen, but the possibility is still there. So the risk is just 100% here. It's whatever you're putting in it, it could be a zero. We saw this happen with Silicon Valley Bank. We saw this happen with Signature. We don't know if that's going to happen with FRC, but today's results or last night's results are not going to do anything to bring confidence back into the bank, because when other investors are looking and saying, hey, 40% of people took their money out, maybe I should be doing it too. That's the biggest issue, is the snowball effect when people start taking their money out. That's why the stock is down 21% here this morning. It's not the numbers, the earnings. It's none of that. It's the fact that a lot of people took their money out of this bank.
And pre-market low comes in at 1233, and we're just hanging above it. I can't say there's like really like a hammer in there, but I can say there's someone just lurking around at this 12 and a quarter area. The dailies are so hard to look at on this stock because of the just because of the way it came down so hard. Everything's
Yeah,
punched up at the
yeah.
bottom. There is a daily low at 1251 to keep an eye on. Next daily low comes in at 1174. But I want to ask you something, Dennis. I watched this stock before the number came out, and boy, it looked like some people were a little bit bullish.
They
Despite
bought
the,
it, yeah.
yeah,
They went
yeah.
up to 16. It was really choppy. It went up and then went down and then went kind of flat, and then the number came out. And initially it didn't get hit. Like in the first few seconds, it didn't hit that hard because I think those earnings were like, oh, the earnings are pretty good. But then, you see, the deposits, and you see the substantial decline, and then they started just slowly hitting it, and they've never stopped hitting it, really. Now, again, I'm not coming in here just saying short, because we don't know. If no investors take their money out, investors start putting their money back in, the stock is cheap. But, what's it take? So it's all just a matter of, what are people depositors, not investors, what are people depositors thinking at this point in time? Do they not care? Is it going to stabilize? Because then it stabilizes at a new level, though, too. So is everybody going to flock to put their money in FRC? Likely not. So they're,
No.
trying to hit, these higher earnings numbers again. And, and they're looking to cut expenses where they can. So you can look and see an 8% dividend, and you think, oh, wow. And I think they cut that already. But just don't look at the fundamentals. Don't look at the numbers, the earnings on this, because that can be all meaningless depending on what depositors do. Depositors stop taking their money out, maybe it can stabilize, but again, it's all valuation here, and when you're losing that kind of deposits, you're going to make a lot less money.
Also, just a final note on this, we'll take a look at some other regional banks. They withdrew all previous financial guidance, and they did not take questions during the conference call.
Yeah, the no questions. I mean, that's tough too. So obviously they've got some issues. They finished it with, we're looking for strategic alternatives, which is another way to say, hey, we got some problems here still, and we're looking, to either sell ourselves or to figure out, who's going to lend us some more money. So banks got serious problems, bottom line. Maybe they get out of these problems. Maybe it's going to be a long-term buy. I'm not touching it.
Let's look at some of the other regionals. PNC has already reported. That's just trying to digest the move. You do have Western Alliance Bank taking a little bit of hit on this one after good earnings, getting back into that gap area. Regions Financial, that also reported. That's down 29 cents. What else do we have?
PACW, PACWs, and one that has been moving around, obviously, with FRC. It's leaking here this morning. KeyBank, you can look at that one. It's been leaking. I mean, this is the KRE altogether. So the KRE, we are literally one, not even. So the low of the entire move is 41.28. We're a buck off the lows. So think about the move that we've had in the last month, in the SPY going up, 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 up. And the KRE is sitting on the lows. So we need to just, like I was saying, I don't think you want to touch any banks until the KRE starts getting above 45. Schwab's getting hit here this morning, SCHW. Not crazy, but it's kind of given back that little rally that we did get off the WAL. So it's starting to leak here again, too. There is some underlying concerns here still. We are not out of the woods in the regional bank financial crisis. That's the bottom line.
All right, now the more concerning report, and probably
for me,
the most of the reason that we are down this morning is we're not liking what we heard from UPS this morning. They missed by a penny, no big deal, a penny here, a penny there. They missed on the sales by a little bit, 22.9 versus 23.01, but they expect volume to remain under pressure given current macro conditions. That's important, Dennis, and they're taking it out on the stock this morning.
We've talked about this before. FedEx and UPS are huge indicators for the consumer and what is the consumer doing. And when UPS talks about volume to remain under pressure given current macro conditions, that's not a rosy outlook. not just for UPS, but for the economy overall. It's telling you UPS thinks the consumer is slowing. So it has taken a long time, but UPS is thinking that the consumer is slowing, which is concerning for stocks. Now, again, do we expect, the consumer to slow? I think the market has expected that for a while. It just hasn't materialized. So how much of that is priced in is the question as well. I think, if we were just, in rosy, everybody's, oh, we're out bullish, and UPS came out with this, I think the S&P would be down 50 handles. But it's not down 50 handles. We're down 19 handles. And I think the reason for that is, well, yeah, we kind of expected the consumer to slow. I mean, it's all about expectations, and that's where we still sit. So it's hard to just go, you got to sell everything now that UPS thinks the consumer is going to slow. We've expected the consumer to slow for a long time. And if you think that interest rates are going to come down in the second half of 2023, you need the consumer to slow down. If you want interest rates to go down, you need the consumer to slow down, because they're not going to start lowering rates if the economy is not starting to slow down. So that's where we stand right now. Difficult to, say, is this UPS a buy, on there? Are we buying the dip on these stocks? I think you need to maybe wait a couple days and see, if buy the dippers materialize. I want to see if buy the dippers materialize in FRC, to be honest, just even going back to that. But UPS commentary is concerning, and it's telling us that the consumer is actually starting to slow down.
All right, 184.88 was that initial reaction this morning. And so you're getting a little bit of a bounce off that. So whatever immediate sellers you had, looks like they puked out their initial positions. Street leaning the wrong way into the report. The upper right chart reflects the price action in April so far. So you have basically wiped out 3 weeks worth of gains here in one earnings report. The 184.88, there is a couple lows under 185 at 183.72, but I think what I would do, I'd do a little reset this morning, and I would block out that pre-market low, and I'd say, wow, you got 3 lows the same area at the 186.50 area. 2 in April, and then 1 back in March. That's 75 cents away. The fact that it already traded through it doesn't make it a great number, but if you took this home short, or you have some 190 puts or something, that's an area of interest. I'm not sure we're going to get back to the top of the bottom of yesterday's range. That's way up at 194.74. So the fact that the street was leading the wrong way into this report with 1, 2, 3, 4, 5 out of 6, 6 out of 7, 7 out of 8 up days, you're having some people regretting those buys. FedEx, which is on a little bit different of an earnings cycle, they are trading down 366, just consolidating at the top of the move.
And they already
once
reported.
again, yeah, they already report. Yeah, they don't report again.
A month ago.
Yeah, if you're looking for your driver today in the market, you put 2 stocks up there. You put UPS and FRC if you're looking for the market just to do that reset. Like, okay, we're back down at the previous day's lows, and we're going back up to the 41.60 area.
It's those 2 stocks, the reason the market is down. And if you look at the majority of these other reports, yeah, there's some other ones that are down too, but a lot of them are actually pretty good. Maybe go to General Motors, because they're telling us a little bit opposite. I mean, me and you, it's a head scratcher why GM stock is still sitting near the lows, because they seem to do pretty good every single quarter. Joel, give us those numbers there from the Benzinga Pro and General Motors, because this report was pretty good.
And this happens. This has been happening a lot. They keep coming out and saying good things. They beat by 50 cents, Dennis. Adjusted EPS 221 versus 171 estimate. Sales have beat as well by 39.98 versus 38.95 estimate. They bump up the lower end of the guidance. Global deliveries. It's just like, the market doesn't care. For some reason, these stock is just for the getting no Motor City love here, even during the big rally that we've had. Let's just take a note here. You have a pre-market high at 35.80. I would keep an eye on this 30, and you've already faded off that too. Very important for this to get through 36 today. There's a pair of highs right at the $36 area. So that's just above the pre-market high. It's going to have to rally a buck to get there. I'm not exactly confident it's going to do that. If you're looking for a gap fill on this one, which GM can move a buck on you pretty quickly, the bottom of yesterday's range comes in at 34.40. Ford has not had as much good news as GM, but that took a hit. That was a quick move from 13 to 11.50. Ford kind of in no man's land here, but they're not believing the GM numbers day after day after day, Dennis.
No, the market, like if you really thought that they're going to continue to put up these numbers and continue to they're raising guidance here again. I mean, the stock is trading with the PE right now, so they're expecting earnings outlook for 2023. They're raising it up from 635 to 735. I mean, the stock's trading with a PE of 5 right now. So on normal markets, you'd see a stock ripping higher like this, and it's up. It's not down, it's up, but it's not really ripping. So, I mean, they're expecting, the market is basically saying they're not going to continue to hit these higher numbers because, the stock is just too cheap. So I wonder if GM, if they really believe it, you wonder if they should, bump up that dividend. If you really believe that, you're going to continue to just, be kicking butt and taking names here, 1.03% dividend is not much there. Maybe you should bump that back up. Maybe they should, to get the investors the vote of confidence. Because right now, investors are saying, well, you can raise guidance all you want. We don't believe it. And that's why the stock's, it's up this morning, but it's not up substantially. And this was a really good report.
We don't. Maybe we'll track down Michelle Krebs and get her take after we get the.
She's
Ford
usually
earnings.
bullish, though.
Yeah.
Yeah.
All right. Let's just take a look at Tesla. Was that a Tesla turnaround for you, Dennis? Undercut the low of the move. Nice rally towards the end of the day with the market trading down $1.90 now. I mean, if you're taking a poke here on the long side, I don't know what you're leaning on because I guess you can lean on yesterday's low. Yesterday's low came in at 158.61, but this whole 140 to 160 area, I don't know. I don't like the way that looks on the chart. I'd be much more comfortable if this came down to 146, 147 and filled the gap. But Tesla still trying to recover after earnings.
It's going to move with the mega cap tech, which is going to report here tonight. So we know Tesla's already reported, but it will still move with the Microsofts and the Googles. So, and we're coming into Meta. Like we said, Amazon's going to report on Thursday. We're getting so many big S&P names. This earnings is really going to dictate the next move. What is Microsoft saying? Are they saying similar stuff to UPS? Are they saying we're seeing slowing? Because Microsoft is priced for perfection. Or is Google, what are they seeing? What is Amazon seeing? What is Meta seeing? I need to get that information before making any market calls here. And I think the market's the same thing. It's why we're just meandering in this range here. We want to know what the mega caps, and obviously they're heavy weighted in the S&P before the S&P makes its next move. But so far, really not so good, I would say, this earnings season. The banks were fine, and they were good earnings, but they faded. The biggest issue, JP Morgan held up. But you had Bank of America had a pretty good report. It faded. Citigroup had a pretty good report. It's kind of faded now, too. So you're starting to see a little bit of profit taking in some of these names that reported. Goldman Sachs has held up well. JP Morgan has held up well, too, probably best of breed banks. But overall here, I don't like the UPS report. I don't like the reaction to General Motors. I think it should be up a lot more if the market was confident in these numbers. And maybe they will come in. Maybe they'll come in and buy it up higher. But I'm just... and then you see which stocks are really holding us up. And we can go to this right now, Joel. The consumer staples are all still doing really well. And we've got a number of those reporting here this morning. And that's really been what's been holding this market up a lot.
Yeah.
Mega caps and consumer staples.
All right. Let's what about, what would you be thinking about if you were long this Pepsi, right? It's up 310. First, let me go to the numbers here. What do you like better, Pepsi or Coke, Dennis, or don't you really care?
I can't tell the difference.
Okay, all right. So if we put a blindfold on you, you couldn't tell the difference?
No, definitely not.
Yeah, you could. Let's see. Core EPS $1.50 versus $1.39. Same beat on the sales, 17.85 versus 17.22. They raised guidance. They expect revenue to increase 8% versus 6% prior. Raising core EPS, nothing but good news out of Pepsi-Cola. Trading up at is that a new all-time high? Trading a new all-time high.
So.
The only reason I would fade this thing with both hands is Coca-Cola. Look at that Coca-Cola
Yeah, the Coke
chart.
was just as good of a report, and it came in, and they just sold it straight off. Pepsi, this is the same report. It's pretty good. Maybe, people were expecting it to fade. Maybe that's why it hasn't sold off here yet. But it took a while for Coke. Coke actually opened strong that day, and then it reopened, and then they sold it off. So I do think Pepsi is kind of priced for perfection as well. The PE hasn't been cheap on Pepsi in a very long time. I'm just curious. I'm going to go look that up. But I'm agreeing with you, Joel. I'm not chasing any of the consumer staples because I still don't get why I want to be in Cokes and Pepsis and consumer staples when I can be in treasuries for 5%. Because I don't think you make much more, from a risk reward perspective. I don't think you're making 12, 15, 20% your Cokes and Pepsis. So if I'm going to have Coke, Pepsi, consumer staples, these conservative stocks in my portfolio, I'd rather just be in treasuries.
All right, Des, watch the offers a little bit of a sneaky rally. Yeah.
28 is the PE on Pepsi right now. You have to pay
my Lord.
28 times. So this is just how crazy this market. You want to pay 28 times for a company that's barely growing earnings when you can get 5% sitting in a treasury. I don't get it. I don't get it. I don't get it. I don't get it. I think money is just hiding there because it's playing defense. And I think if the market turns around, Pepsi and Coke are not going to participate as much. If the market really starts to sell off hard and we go into recession, well, Pepsi sells to a lot of bars and restaurants too. So may not hold up either. So I agree. I'd sell my Pepsi if I had it.
I just want to go back to that. Just we could give you. I'll just go first. I'll give you the Pepsi levels. Boom, boom, boom. You just got over 189. Your pre-market high stands at 189.10. So keep an eye on that. You're only 50 cents away. But I just, we have different people coming to the show at different times, and this Coca-Cola, we really spelled it out well yesterday. And I think it's an important thing for newer traders or even experienced traders, is that stock in the book. I mean, it's not like it used to be when you had eights or teenies or whatever. But the main reason that Coca-Cola ran into problems yesterday is it just found too many sellers at 65. You got that little sprint in the pre-market over 65, and I'm thinking, well, I don't think this thing's going to open over 65. It opened 64.75, right? And you're thinking, okay, baby, we're going through 65. Boom, 64.99 was your high. So I don't know how many shares were there, but all your high freaks or people that have the 65 offers in the book could sell that stock with a look of losing a penny if it rolls through 65, and then you just add pressure on the remaining of the session. Pepsi is not the same kind of stock. It's a higher price stock.
Yeah, it won't have that kind of size.
It's not going to have that kind of size. Okay. Well, maybe Mickey D's is selling a lot of Pepsi-Cola here. Mickey D's trading at a all-time high. McDonald's, the drive-through indicator, when I go by a local, it's been busy, but it hasn't been like pandemic busy. 263 versus 233. Right? Beat on the sales too, 5.9 billion versus 5.59. People are eating out at Mickey D's. Pre-market high, a little bit different here. You found a firm seller here at 297. You ticked there a couple times. So that's a much better level than 189 in Pepsi-Cola.
And 300 will be absolutely enormous. If for whatever reason it just gets silly, I would expect there's probably some big sellers up there at $300. I took it long through the report.
Nice.
Reason it was down $1 last night. Fast Money actually knocked it down. They were talking bearish on it and knocked it down $1. And I'm like, you know what? I see the McDonald's drive-through numbers. I think they'll beat. So I bought it when it was down $1 last night. I've already sold it. So I sold it when it popped up on the earnings report, but I took it through the report. It had a nice pop on the earnings report. So again, it's a lower beta name there too. So is this going to do the rug pull and just tank? I mean, I don't know. I mean, there's underneath demand in McDonald's there as well. I'd say 300, is definitely major resistance if you're able to get up there. If you're pulling back, it's hard because it's been on such a run. We've been coming from 260 to 290. So I don't think I'm buying dips on it though. Not at this point in time.
I mean, look at this thing. This thing came from low 260s in the middle of March. Letting it just straight up move here by McDonald's. It's funny. I always think about this stock, Dennis, and I think I gave you that presentation that I did in Dana's 5th grade class, and that was just after like 9/11 and everything. And I did the market, the stock market, and mathematics and things like
Yeah.
that. And I remember, talking about McDonald's to the class, right? Because I wanted to talk to. Wow, my chart doesn't even go back that far. Wow, Dana's 30 now. Whew. But
Boy.
anyways, I remember, the stock, I think it was like at 15, it had come down from like 30 to 15. And I remember, talking to the kids about it, something they can apply. And I'm like, so, when the market sells off, a lot of people look at like products that they use a lot. And I'm like, do you guys like McDonald's? And like, all the kids, like, of course, like raise their hand.
Yeah.
And oh man, I wish I would have went out and bought the stock then.
I do too. I can remember when it did that too. It went, and if we go back, it was like it fell during the tech bubble burst is when it fell, and everything fell, and the valuation maybe was a little bit overdone. Maybe we got to go look at the charts. How far? You can't go far enough back to see it on this platform.
I
I'm
could
trying
go
to
back
go
to
to, but I do
03.
remember like $16, $17.
Oh, I got that. Oh yeah. No, I don't have that.
Oh, not quite far enough there, but you can see it was down to like 16 or 17 bucks, and it had been up to like 50 or 60. We're talking McDonald's was down 60 or 70% from the highs. I'm trying to go back and see it myself on a
On
different
your chart.
platform. Yeah. So back in like 2000, we got up to like $45, $50, and then we went down to like 15. So it was down 70% from the highs, but it was one of those in the tech bubble burst. Obviously, McDonald's was the one to buy. And you know what? It got down to reasonable valuation. You know what really was the bottom for McDonald's? Was that movie that came out. Remember the movie? And they were
Oh
hitting it on that. What
yeah.
the hell was it? Where he ate McDonald's for 30 days straight, and all his health fell apart, and they were like, you can't eat McDonald's or whatever. And that was the very bottom. That's when they were selling McDonald's. They're like, oh, nobody's going to eat McDonald's going forward here because it's killing this guy on the TV. What was Supersize Me? Jennifer,
Yeah.
thank you. Mark, our chat's on Supersize Me. That was the very bottom for McDonald's, the Supersize Me. And I remember thinking, and I remember watching that movie myself, and I was like, I don't know if I want to buy this McDonald's stock. It even had me spooked. And obviously, McDonald's stock at $18 a share would have been one of the buys of the century here, because here we are, we're up like 2,000% from those lows where it was when that Supersize Me movie came out. So sometimes when you get the major, media covering and everybody's talking, is McDonald's really deadly and really killing you? All this, that was the bottom.
Oh boy.
12.12, its plan B says was the exact low.
Yeah.
That sounds about right.
Yeah. Whew, boy. Also, just
12
and
bucks it got down to.
I've mentioned this before. My dad made a lot of good predictions, a lot of bad predictions. His two worst predictions ever. One of them involved McDonald's, and this was back. I don't even know. I'll give you the preferences or the words that he used. We went to a McDonald's after his swim meet, and he
What
said,
year would this have been? Take us to the year.
"Oh man, I don't want to reveal my age.
70?
Everybody knows how old I am. I'm old. I would say that this had to be in. It was probably in the early 1970s.
Like 1971 or 72.
Yeah, yeah.
Yeah.
And we
Your
went
dad's
to
taking you to McDonald's.
after a swim meet,
Yeah.
and I remember his exact quote. He said, "Who would pay a nickel for a stale cup of coffee and a dime for a horrible hamburger?"
He's like, this thing's going out of business for sure.
And then the other thing was he didn't really think television was going to make it. Who's
Those are
going?
two pretty bad predictions.
He said, "Who's going to want to sit around and look at a little box on your living room floor for hours?"
Those are good predictions.
Right,
sometimes you got to fade your dad. I guess on that case, you had to fade your dad on that one there. But
Yep.
wow, looking back, a dime. The burger started at a dime, eh?
I think so. I think
cents,
that's
10-cent burgers.
Yep.
Yeah. I remember when the Big Macs, like in the 90s, got down. They were on sale, and they were down to $1 or something like that. Big Macs, it was like sale. Big Macs for $1. I was like, my buddy, he's like, these are the best things ever. And he bought like 200 of them, put them in his freezer. And he was eating Big Macs all year. So
really?
He's like, how can you ever eat cheaper? You're getting these burgers, these awesome burgers for $1. So yeah, he bought like 200 of them, put them in his freezer, and it was just eating Big Macs all year. A buck
And
a piece,
do
$200
you
worth.
remember the saying that you had to say within like 5 seconds in order to get a free Big Mac?
No.
2 old beef patty, special sauce, lettuce, cheese, pickles, onions on a sesame seed bun.
And you could say, and you got in there and got them for free, didn't you?
Yeah, exactly. Exactly. All
Joel's
right.
all over all the deals there. So McDonald's, you gotta love McDonald's.
Okay. What about, should we take a look? Let's look at some other fast food restaurant stocks. Wendy's.
Nothing
Where
ever looks like McDonald's, as it's a straight up. Burger King, though, I tell you that, and I don't think is Burger King still traded? I think they took it back off, didn't they?
isn't
Question:
it
Is Burger King still traded? Chat. It was
is it
back
Q
for a bit. Did they take it back private? But what I will say is Burger King. I ate there a little while ago. Again, my parents go for those Whopper. They get the deals on the Whoppers. It's actually better than I remember. The Whopper was pretty good burger. Yeah, Whopper was a pretty good burger. So I'll give Burger King some love. But I don't think it's traded publicly now. It was out there for a bit. I think it's gone now again.
what is this QSR?
Is that got Burger King in it? Well, QSR was all the ones. It was like it was the spinoff from Pepsi. So let's look here. QSR. No, Yum was spinoff from Pepsi. What's QSR? What's all in there?
I thought that was Tim Hortons and
no, I don't know if Timmy's in there anymore. Let's go look. There's a pile of them in there. So let's go look at the QSR. KFC. No, wait a second. No, it's not. I'm trying to see who's in QSR. It's a bunch of fast food restaurants. We're gonna find
Popeyes. Yeah. I think Burger King might be in there.
Google failing here. I should go to Bing. I go QSR restaurants, please, and it's not bringing me up the restaurant names.
Oh, Bing is terrible.
I got to go Bing this. Man, I should sell my Google because I'm going right here. It's 3 different ways I've done it. What's the name of QSR actually? Because then they get the restaurant brands.
Yeah, okay. Restaurant brands.
Restaurant brands, restaurants.
Panera's gone. Panera's gone. That was taken private.
Burger King, you're right, Joel. I think Burger King's in there. Popeyes, Firehouse Subs. Tim Hortons is in there, Joel. Joel with the call. Timmy's is in there too.
Yeah.
So there's your Burger King. It's in QSR.
You want another quick story about being cheap? I was looking for something in the key drawer, and I found a Dunkin' Donuts card that my son-in-law got me literally in 2017. And I was like, I don't think I used this up yet. So on the way home from the gym, I stopped at a Dunkin' Donuts. I went in there, had $4.81 on it.
Go.
Yeah, and I'm like, I don't really like their donuts, but I got 3 bagels off it. But not just one last thing about Mickey D's. They spun off CMG.
Yeah, they did. And that was a huge, you just think about all that. CMG was in there. I mean, McDonald's just does everything right.
Okay. All right. Let's go to probably
CMG
the most
reports this week too. Reports tonight.
Tonight.
CMG is tonight. Yeah.
Yep. Okay. So
we really went on a tangent there.
I'm sorry about that, folks.
That's okay.
It's all right.
I like the tangents.
General Electric. I mean,
stock that never stops going up unless you bought in the year 2000.
I mean, okay. So General Electric here. Boy, I wish. What was that one guy's name that we had? John Inch. I think he retired. He was a great analyst. He was bearish the whole way down.
Yeah, I don't know if he's retired, but John Inch, yeah.
Yeah.
And he's been right. I mean, overall, he's been right. Not in the last few weeks, but he's been right overall.
27 cents versus 14-cent estimate. Adjusted revenues at $13.7 billion versus $13.36 billion. They raised the lower end of guidance. So they're, free cash flow. I mean, 97 years of cost cutting. And, they got away from the financial end of things, which it took a long time. But I just don't know what to say about that. I mean, you look at the chart and you're thinking, wow, this is one heck of a rally. But then, man, what was it back when it was the top component in the S&P?
In the year 2000, General Electric, because we did the reverse split, General Electric topped out around 300. I don't have the exact numbers. I'm ballparking from a chart. I'd say about $360. So if you invested back in Jack Welch's General Electric in 2000, you were down a cool, 70% over the last 23 years. So in that same time period, Honeywell, which was very much a comparable, and Honeywell actually almost got bought by General Electric, Honeywell is up from $60 to $200 in that same time period. So you picked the wrong one if you went in GE. It has been the dog of all dogs, from the highest market cap in the world to, to here. So you can say, wow, GE, what a stock. Yeah, in the last 6 months. But look at the last 23 years, this stock has sucked.
And boy, oh boy, remember when that deal blew up at Bright, when a
The
lot
Honeywell
of
GE deal, yeah. A
yeah, a
lot of bright
lot
traders lost some money in that one.
yeah, and I'm like, man, yeah, you tell me spreads or risk arbitrage. Well, now I know what the risk is.
When the deal falls apart, it was GE, and GE was buying Honeywell. It was an all-stock deal, and a lot of traders had it on. And then they came in and they squashed the deal. Antitrust, I believe, was the issue there.
Mhm.
And it fell apart, obviously, that day. And Honeywell just tanked and tanked and tanked. And GE actually went up and up and up. And that would have been the buy. Honeywell would have been the buy on that day, and GE would have been the sell. So, but, hindsight capital against 2020. But there was a lot of risk arb traders that lost a lot of money that day.
GE, this stock ending the year at the $65 area. We just crossed the 103 threshold. 103.06 is your pre-market high. You're only 40 cents away from there. So, uh, run up before the report, run up in January, February, and March, run up in April. With this one, I mean, you can go to the monthlies here. Your next monthly high, oh boy, comes in at, up at the 116 area. Folks, I don't got anything for you. If this thing opens up and it looks like it bottoms early, then maybe you could look at one of your average trading ranges for that, and use that as a target coming back on the downside. Yesterday's high was 100.77. And the other stock, I mean, they spun off this GE Healthcare. I mean, how many times I mean, look at what this thing has done.
Yeah,
Holy
it's been a
mackerel.
monster. And again, GE has been a fabulous investment for the last 6 months, but it's been a very awful investment for the last 23 years. So maybe it's like it's time to bark, but let's give it perspective here. Let's take it back to GE. It's up here again. I have no idea why they continue to give this stock the pass that they do in the last 6 months, but they keep buying it relentlessly here. I mean, they're now expecting for fiscal year 2023 guidance to be $1.70 versus $2. Estimates were up at $1.98. It's kind of a lowered guide. It's sure they could hit it if they hit the upper end, but that is not great guidance at all. And it almost feels like a lower guide here. And then if you want to take it from that multiple, 23, well, $2, it's trading 50 times earnings. Why am I ever going to pay 50 times earnings for General Electric? So I don't get it. It keeps going up. Again, technicians, momentum traders are all over it because it's just been relentlessly going up. And I've been wrong because I've been bearish this thing since 90, and it continues to go up here. I don't understand it. I don't get it. I think eventually it comes back down, but they're giving it a pass. I don't know why I want to pay 50 times earnings for GE though.
And did GE Healthcare, we might as well do that. They beat by 6 cents, and they beat on sales too, 4.71 versus 4.63. They reaffirmed organic revenue growth, but I don't know, they're seeing something they don't like in the report there, because that's trading down 329. And whew, boy, oh boy, you try and find support on this
Yeah, this
one.
earnings report looks better than the other GE, like than the regular GE report, but they hit it on this one. So again, it's tough to get the reaction. Like sometimes you can have the earnings report. You could, if you're an insider, you could have the earnings report right in front of you. And a lot of times it would still be difficult to make money in this market, because just because they beat and raise doesn't mean necessarily it goes up. And just because they miss and guide lower, usually they go down if they miss and guide lower though. But when you get these, beat, sometimes, they still go down on it.
Yeah, we'll have to see what happens with GE later on today. Let's stick with the good earnings. Dennis, have you been buying much tape lately? Triple M here. Let's bring up the chart. I remember talking about this one, and I think it was at like the 115 area. It had a gap down. It was right here. It gapped down, and we're like, man, how can you hold on to a stock that has been just the worst performer? $200 in the middle of 2021. Adjusted EPS 197 beats 158. Sales are pretty good too. 8 billion versus 7.49 billion. Not bad. Got a little carried away with the spike up to 108 and a quarter. Man, what do you have on the dailies here? You know what? I'll do a reset on this one since we're back down at 106.30. And I'll say what happens at 107.15? That's three highs in a row going back to mid April from 107.10 to 107.30. So we'll be keeping an eye on Triple M. Dennis, did you get down and dirty in this one at all?
No, I haven't. And again, Triple M is all about the earplug lawsuit. And until we get some clarity on where that is going, that's been the issue. That's why 3M trades at 10 or 11 times earnings. It trades very cheap. It's got a nice dividend, but that weighs on it just as much as Johnson & Johnson obviously got their stuff settled. I think 3M will be a buy when they settle out this earplug lawsuit, as long as they settle it out at reasonable terms. But, they're getting, sued big time there for the potential defective earplugs there, and we still don't have clarity on when this actually might get settled, or if it's going to go to court, or what's going to happen there. And this actually is the reason why the stock continues to be trade at such a cheap multiple. So until we get clarity on where that earplug lawsuit's going, I am going to just stay away.
Yeah, and I believe the one settlement they had was ridiculously large, and so if you multiply that out,
That company's bankrupt. If you
yeah,
that's on some
exactly.
of it there too. So
Okay. All right. All right. So we did some good earnings there. Let's go to Verizon here. And Dennis, I know you've been negative on these stocks for a long time, and for good reason here. You are now busting. I would say the Bulls got to make a stand here at $37. You had three lows in the last three sessions. You dipped under that level in the pre-market. Pre-market low comes in at 36.50, but it got hit on the AT&T report. Now it's getting hit on its report. Let's see if you could hold 37 or fill the gap down at 36.83. Dennis, let's hear your negative thoughts.
yeah, I hate Verizon and I hate 3M. I hate them for a long time. Me and Jason Raznick were on this show 2 years ago, and Verizon was trading $55. And we're both like, we both don't like this company at all. Jason, fantastic call. I'll give myself a pat on the back too, because I'm with you. Fantastic call by me too. I don't like Verizon. I've hated AT&T. AT&T back then was $32 or $33. I've hated that one too. I'm going to continue to hate on both of these companies. Cord cutting does not help them. Yes, they have wireless. Yes, they have some other businesses there, but their core businesses, DirecTV. I mean, come on. So you want to invest in this stuff. These are declining businesses. Yes, the dividend looks attractive. T-Mobile also eating their lunch. There's just so many reasons to be concerned. So don't get sucked in by the dividend. People have already been sucked in by the dividend before on AT&T, and then they cut it. And now it's back to 6.3% of people are getting sucked in again. They'll probably cut it again. I don't like either of these companies fundamentally. I will trade them. I pair trade them against each other, but I will not own AT&T and Verizon unless something materially changes.
All right, and just the best in breed here is T-Mobile.
Yeah, eating their lunch.
Yep.
Unbelievable. T-Mobile continues to grow, continues to go up. Stock is loved on pullbacks, which it has pulled back recently. It seems to always be a buy. So if you're buying the pullback on T-Mobile, I won't argue with you. It's just like T-Mobile's just figured it out.
Okay. All right. I see someone still on the earnings hit parade. S&Ps are trying to rally. We're down 1775. That's off the 11 and a half handles off that pre-market low. I did jot down mid-range on the session. I kind of, when there's a nice range overnight, I like to keep an eye on that. Mid-range so far comes in at 44 and a quarter. You just take 44 and a half and seem to be just fading a little bit. But boy, oh boy, looking at the dailies here, this is going to be the 8th day of a trading range, and I'm giving the trading range between 41.30 and 41.98 and a half, which was the high of the move. But in reality, I mean, this has just been a chop fest between 41.40 and 41.60 over the last 7-8 sessions, with some big earnings reports looming after the close.
There was an analyst on CNBC, and I don't
Mhm.
remember the gentleman's name, but I watched it yesterday, and he was saying he feels the S&P could be in a range for the next 10 years, the next decade. And then, I'm looking at that, I'm like, this guy could be right. I'm like, I think the way to play this market still, again, there's still risk here. So, but I still think we're not rip roaring back to highs and buy. I think selling calls, maybe even selling covered calls, is maybe the way to play this market here for the foreseeable future. Because I don't see us as falling off a cliff, even if we go into recession. I'm not sure. I just see the consumer just, stopping. We've seen, even with higher rates, I kept thinking it was going to hit them, but we know the banks just, bring the amortizations out and people have money again. So, I mean, the banks find a way around it. The only wild card is if we start seeing, this regional banking crisis start to escalate, or we get geopolitical risk and China invades Taiwan or something like that. Those are your major risks, and that's where I wouldn't want to have covered calls written. But so far, I think you're just writing premium. I think you're going to be happy about it, because I think this SPY could stay range bound for a very long time. I'm not sure 10 years, but we've had periods. And, market doesn't, realize, a lot of people don't realize this. If you go back and look at the S&P chart, we had periods of time, 1970s, S&P stayed flat pretty much the entire 1970s. We had obviously, some big rallies in the 80s and the 90s, and then we got to the O's, and it was the same thing. From 2002 to 2012, S&P really gone nowhere. We got hit hard. We kind of just meandered and just kind of stayed within that range. Joel's looking there too. So you can see, and obviously we sold off substantially in the financial crisis there, and it was really ugly. But I mean, we've been kind of range bound here at periods of time before. So we've had such a big move from 1,000 basically to 4,000. Maybe we go into a 5 to 10 year digestion period where we don't go up every year. We don't go up 20% a year. So I mean, two ways. If the S&P is going nowhere, those 5% treasuries will look pretty darn good. But if the S&P is going nowhere, you know what'll look better? Writing covered calls against your S&P positions. So I think I won't argue with you if you're writing covered calls in this environment.
Look at this monthly candle. I mean, I just can't get over it. I mean, we're almost at the end of there's a month end on Friday, I believe, because of I mean, look at this. I mean, this is just unprecedented here to have. And I went back and when I did, I think it's the smallest monthly candle. I think I said 2019.
Coming in.
Yeah, look,
Volatility's coming down.
yeah, look at that.
Yep.
July of 2019, we had a 40-point range, right? Is that right? No, 40 and 30, 70-point range. And I'm looking at the cash index. And right now, we're at a 60-point range. So I'd even have to go farther back to find when we've had this kind of quiet. I'll be keeping a close eye. And just going back, I made that call, earlier year that the highs were in, and they had me shaking, right? Last week and the week before. And I kept on saying, I want to see how Q1 earnings season goes. And so far, it's really not giving me any cues, because you're getting some beats, you're getting some misses, but that's going to change, right? You get the big boys coming. And if you get a warning out of one of those, well, we'll see what happens.
It could change. UPS is not good news overall. But again, some of this is expected. The market is kind of expecting a slowdown. I just think the battle between the bulls and the bears could go on for a very, very long time. And yes, there are some markets that are doing very well. We saw Europe, outperforming here to JC Brett's point. But there's a lot of markets that aren't doing that well. And even China was doing pretty good there for a couple months ago. And we've just been leaking there now in China and obviously coming back down to the lows. And I do believe geopolitical risk is a major reason why you're seeing Alibaba and Baidu making new lows and JD making new lows and the FXI making new lows. So lots of, balls to juggle here. But maybe when you add it all up, maybe the bulls got a good case and the bears got a good case, and they just keep battling and battling and battling. And maybe that battle goes for a long time. And if you're writing premium in that battle, you'll be happy you're doing it.
All right, let's do one more earnings report here. Pulte Homes Group, Dennis. Now, if you're looking for a slowdown in the economy or a recession, and you were banking on higher interest rates, sticking a fork in the housing market, Pulte beats. They beat by a wide margin, 235 versus 181. Sales at 357 versus 3.27 billion. Announces a $1 billion increase share repurchase authorization.
Yeah.
What's there not to like here about Pulte Group?
I've been wrong on the home builders for a very long time. You got a stocks that I don't get where people are getting the money to just build all these houses, even with higher interest rates, but they're finding the money. People are finding the money to do it. And, lumber costs have come down. I was just pricing out, I'm doing a shop. I was just pricing out the lumber package on that. And it has come down substantially. So lumber has come down nicely. Steel has not. Lumber has come down pretty substantially. So maybe that continues to be the case. So we have seen deflation, at least in the price of some materials there. I don't totally get why this continues
COVID,
to go.
Dennis. People like their houses.
I think so. Maybe it's just the
Yeah.
mindset. I want my house. I want to have a good house. I'm just going to find the money to do it. So, and maybe we didn't give that enough, that people want to, have a good house to live in. And obviously the YOLO market, where you don't save for a rainy day, you spend now because there may not be it tomorrow. That's really where the mindset has changed. It's what keeps the consumer driving is YOLO. Yes, if they run out of money, that's it. But we know the banks can find ways to give them more money. They just amortize it over a longer period of time. So, I mean, if that's going to be the case, the banks are just going to keep kicking the amortization, making it longer and kicking the can down the road, and people are never going to own their homes. They're just going to pay the interest on them. I mean, these home builders could continue to go up if that's
all-time high, 64.49. And I'm going to do one more here because we're getting asked about Spotify here.
Sure.
Spotify trading at the highs of the pre-market session, just at just over 140. You got your pre-market highs coming in at 141 even. Spotify, let me give you the numbers here real quick for Spotify. And I don't know if I'm seeing numbers here. Oh, total revenue up. It must be a different currency, which is up 14% year over year. Monthly active users up 22%. Subscribers up 15%. I don't think they care about the numbers. 141, Dennis. Are we breaking out here? I don't know.
It's a breakout. My wife gives them money every month. So we've got the family Spotify account. I don't know what it is, like $15. We have like 5 different users on it. So we give them the money every month. It's kind of nice. I just go on my phone. I play whatever song I want. I don't know. Is it something you would cut out during a recession? I think absolutely, but we're not in a recession. Maybe recession is coming. Valuation's always been an issue here for me.
Okay, 8:52 here, and we got to do our TradeZero segment.
Let's
here.
do it.
See what's going on. Let's roll the intro, Aaron, and TradeZero segment.
It's got a good beat. Good beat there with that intro.
Yeah, I know. Mitch comes up with those good ones. So let's go to the up filter first. Yeah, because we want them. Everyone wants the market to go up all the time. And look at the stock we just talked about here.
They're littered with earnings.
Yeah. What I mentioned is Spotify here. I'd keep a close eye on 141 if you're looking for a target on that. What about this THC? Not
They reported earnings this morning, Tenna Healthcare. They were good.
Okay.
I gave it about 10 seconds of look the report anyway. So I looked at the headline numbers, which is what I do. I basically look at the headline numbers. There's no time to dig into the numbers. Who reads the reports anymore? Not a lot of people. We dig in the headline numbers and we trade on it. But I didn't trade THC. It's up $4, almost $5 here.
Yeah.
So, nice move for THC. You know which stock's just been the monster? Is the third one on the list there, Joel's NVS. I mean, Novartis has just been an absolute tear. $80. Look at this move. Gap and go. Like it's just like the shorts. If you were shorting that move up saying, well, it should stall out that 93, 94 top, you're now 10 points underwater. The momentum traders just have complete control of this one. Obviously, they got some good drugs they're working on there. The weight loss drug, I believe, is another big one there at Novartis. And wow, just been a monster.
I don't know what to say. I mean, trading at the highs of the pre-market session. I don't know what technicals you can really do on this one. 100.93 was your high from yesterday. So if you're looking for a gap fill, come back down, maybe sneak your bid out there at 101. Just pressing up here at the highs of the pre-market session at 104.40. What else? We got the Mickey D's in here. We did
all
the
earnings.
GE.
Those are all earning stocks.
Yep.
Go to the down ones.
Yep, let's go to some down ones. Get some negative Nancy's in here.
Oh, DHR. We haven't talked that one. Oh. That's interesting. Danaher. That a report earnings? Wasn't on my list. I didn't even notice it on my list.
Yeah.
I'm going to look right now.
Yeah, let me take a look.
What's up?
Yeah, they beat.
Yeah, that's on my list.
Yeah, they beat.
There you go. Beating a beat. They knock her down anyways. So, I mean, sometimes the beat doesn't mean the stock goes higher. Here's a stock that has been in a downtrend though. And I mean, you get the rallies into the downtrends, which it obviously rallied ahead of this report. And then, trend is your friend usually. And the trend in this case is not your friend if you're long, because the stock has been leaking here for a while. It's a Kramer pick. So, we'll just leave that out there. 245 down $9. You do have some support down the low 240s. I don't know. Tough stock to trade though.
Yeah,
Thin.
higher price stock here, 238. That marks your pre-market low, and that is below. Ooh, what is this? This better not be 238. 237 was some lows that you had back
That's today?
in
It hit 237?
237 is the low
Oh
of the move.
wow.
It hit 238 this morning.
Wow. So that's right there. So again, Joel's levels coming into play. You get those double bottoms, 237, and then they smack her down on light volume to those key levels. That's where they bounce. So, and then remember, always look at the expected move here too. I don't know why I didn't have DHR on my list. So I missed that one.
I think you got to do a reset now that you've bounced so much off that pre-market low. It might not be stock that you can get in there. 241.32. That's only your 3-day low. So if you feel like you missed the bottom here and you want to either try and cover short or attempt a long, whatever you feel like doing. Also, just on the monthlies here, you talk about monthly support. This whole 233 to 235 area, even though you've had a lot of major declines. That's where the bulls stepped up in 2022 and also earlier in the year. Staying on, let's see, what else do we have
Well, I
on the
think we should go
downside?
back to FRC here
I
because it
know
has
I was.
continued to leak here. If you just bring up, FRC, we have continued to leak. We're actually trading down $11.80 here now. So I don't know if they've said something else, but we just took another leg lower. We were about 1250 about 20 minutes ago.
Yep.
And now we've just taken another leg lower here again on FRC, down 26%. KRE, KBE starting to go down too. You're seeing regional banks get hit. You're seeing all the banks get hit, even the majors. Remember, when we have seen this before, and we've seen this story before, just be cautious shorting tech, because we have seen money scramble when they're getting concerned about the regional banks. We actually saw them flock to mega cap tech. So again, mega cap tech reports tonight. But, I'm just saying for a day trade here, some of these mega cap tech stocks are really getting hit this morning. Maybe I'd stay away from Amazon because of UPS. But, you're looking at Microsoft, Apple, Meta. They're all kind of holding up a little better than the S&P, and I think that's a tell. Even
seeing that.
If you're looking, QQQ is down just as much as the S&P. Higher beta there, holding up well. Don't be surprised if you see mega cap tech catch an early bid here this morning if the regional banks remain weak.
We just haven't seen this all out salvent, okay, we're selling everything. It
No,
just
we have
seems
not
to
seen
be
that at all.
no, it's just
Never.
this
Like not in a long time.
subtle rotation. I'll just alert our traders, investors that the recent low of the move in FRC as at 1152. That was your low from last month. So far, we are approaching that on the pre-market low. Pre-market low comes in at 1175. So if there's a level, and there's only one level, then that's it. It's 1152 for FRC. Almost 6 million shares have traded, so they're not messing around here. Also,
No, that's this
the
morning
street
too.
got caught leaning the wrong way into the report. I know that the chart doesn't reflect it because it came down so hard, but there was a substantial rally into the report. Also weighing on the market, we mentioned this earlier, UPS faded here in a 187 handle. Now it looks like we're going back towards the pre-market lows of the session. So the machines are getting going here. FDX getting dragged along with it. Tight consolidation after the big run up. Let's just do a couple more here.
Just before you go, because you're just flying through them, I want to take it back. I was talking about Bitcoin here too, and I tweeted it last night. Bitcoin is flat here overnight. I don't know if you can bring it in. Maybe we can move away, or if you can show a Bitcoin chart here. I don't know if you can show it on this or not, but
yeah.
Anyways, I just feel like Bitcoin, if you're looking at it, has pulled back a little bit from those highs. But now with FRC and the regional banks being concerned again, this is what ignited Bitcoin before. So I actually would be a buyer of Bitcoin for a trade here. So I don't have any Bitcoin here at this point in time, but I'm just looking at it. I think I do have a little piece of my kids are ESP, but that's minor. I honestly think if we're playing the same playbook that we played a month ago, this Bitcoin pullback sets up nicely here because we've pulled back, 2,000-3,000 from the high on Bitcoin. And I think it sets up nicely here just for a potential bounce on the weakness. It hasn't bounced at all here yet, so they're not playing that yet. But if you start to see after the 9:30 open, start to see separation happening here again, don't get caught with Bitcoin short here, I think. I think I'd actually rather be long Bitcoin than short Bitcoin, just if FRC is going to stay weak.
All right, looking at relationships here. We're coming up on the 9 o'clock hour. Boy, that flew by. Dennis covered, I don't know, maybe 15, 20 stocks here in one session. I don't know where else you're going to get that on Wall Street. We are off the pre-market low of 41.30, folks. That just undercut the low from last week and yesterday. The Globex low 41.33.50. So it's just a market that it's been weak. We've been down off the high, but there's just like it's the rope a dope, It's just like on the ropes, and then they come back with a couple punches. So have not had that all out sell day that many
No.
have been anticipating. But we got the fireworks after the close, right? Today with Microsoft and Google and Chipotle, not as much, but waiting on the big tech earnings today. That's why Dennis is a little bit cautious of shorting those today because there's always been this subtle rotation in the markets. Dennis, that's my final wrap for today. Anything else you'd like
No,
to add?
same thing. Just expect rotation. It's not, one of these markets that they sell everything. Expect some stocks to be going higher. And if I was trying to pick which ones, Nvidia has ticked green here now. Netflix has just ticked green. If I was buying the dip here today, it'd probably be on technology and it would probably be on Bitcoin.
Okay. All right, folks.
Now, I'm
Thanks
not
for.
going to take anything through the report. So if I'm buying any dips, I'm not going to take anything through, any of these major reports here tonight. But just talking to you day traders out there, I think you could see a bounce in some of those things off the bat.
Okay, folks. Thanks for joining us. I hope you enjoyed the show today, and I'll be back at 3:30 with the closing print. Christian Farmhurst is going to be joining me to wrap up this trading range market. Everybody, go get them! And once again, thanks for joining us.